I'm Angeline and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, US stocks rate cut uncertainty looms and volatility is rising. Consumption and inflation, US retail sales and industrial production data on deck. We'll get you those retail sales numbers in a second. And earnings on tap, investors digesting numbers from Schwab, Citizens Financial and US Bancorp. A very good afternoon to you. I'm Angeline and welcome to this new edition of Beat the Street. Let's just take a look at the breaking news just coming through now, and it is that retail sales figure that we have been waiting on. We were expecting 0.4% and we got a hotter than expected 0.6% reading month on month for the month of December, which shows that consumers still are resilient and shopping during the holiday season. That number coming after a 0.3% rise in November, showing it's going from strength to strength. Let's just have a look at the Wall Street, which mirrors the Dow Jones Industrials to see whether there is any indication of reaction there. Prior to the number, it was at 37,224. It's come down slightly. Let's just have a look at the volatility index for you, and taking a daily view there, just bringing that out for you. It was at around 15.28. It's ticked slightly higher, 15.3. And last but not least, the dollar basket for you. Dollar basket ticking slightly higher against the dollar, ticking slightly higher against a basket of major currencies. Perhaps with the stronger than expected retail sales reading, it's giving investors a bit more of a redirection in the expectations of that Fed interest rate cut. Without much ado, let's cross over now live to New York, where Chris Vecchio is standing by for us. Chris, what do you make of these retail sales numbers? Looking strong, eh?
Good morning. Yes, indeed, very strong. Strongest report that we've seen since September. Perhaps importantly, the retail sales ex autos and gas up by 0.6% month over month. And the big one, the retail sales control group, the subset of data that's used for PCE and more importantly, the GDP calculation, is up by 0.8% month over month versus 0.2% expected. We're seeing that treasury yields here are moving higher across the board in the immediate wake of the data. We're seeing that stock futures are falling back. So I suppose this is a classic good news is bad news right now for the equity market, still appearing to be sensitive to those March rate cut odds. But all in all, this is a report that's going to leave the economy in pretty good footing at the end of 2023. We do have the GDP report due next week, the official first reading, currently tracking around 2.2%. This is the kind of retail sales data that's going to bias that report to the upside, and more importantly, get us closer to the Fed's 2023 growth target. In the December SEP, they outlined a growth target of 2.6% for the calendar year 2023. This is a piece of data that will help us get closer to there. And quite frankly, if the economy is growing as fast as the Fed thinks, if inflation's coming down, if the labor market's stronger than what the Fed anticipated, why would they move and cut rates so quickly this calendar year? They wouldn't, Angeline, and that's why the market's reacting the way that it is today.
Now, at the same time, we're seeing geopolitical concerns rising, especially in the Middle East. We've also got this concern that weakness coming from China. How is that going to muddy the waters, if you like, for the Fed?
Well, the Fed can't control anything that China does. It's one of the issues that the Fed had with the supply chain issues around the pandemic and then Russia's invasion of Ukraine. Jerome Powell's not going to call up Xi Jinping or Vladimir Putin and say, can you please, stop with the lockdown, stop with the war. We need to make sure that prices are lower. So when the Fed can't influence the decision, it has to just kind of keep an eye on it on the margins and hope that what it's doing on a macro prudential level is ultimately working out. Listen, China's a problem. It's a problem for energy markets right now. Ultimately, it's a problem in FX with the yuan. It's a problem in global bond markets. But is it something that the Fed can control? And the answer, quite frankly, is no. So is that really part of the story here? Obviously, if you're a macro trader, China matters deeply. If you're trading 6A, the Australian dollar, or Aussie dollar spot rate, if you're trading copper, if you're trading, a Brent oil or crude, it's going to matter for you. But this week, China definitely is the big thing. GDP, industrial production, retail sales, all of which matter greatly. And we're seeing those ramifications play out in markets here just immediately 2 days after the holiday.
Right, thank you very much, Chris Vecchio there from Tastylive, part of IG Group, of course. The US stocks indicated as extending declines after that hotter than expected December retail sales data. Now, just checking in on some other companies that have reported. We've got US Bancorp, just the headlines here. US Bancorp, just checking the shares for you. Not one that's all sessions, but you can trade this on the IG platform when the cash session opens. US Bancorp reporting a drop in Q4 profit. Lender incurring a charge related to replenishing a government deposit insurance fund. Another one that I want to look at is Charles Schwab as well. Charles Schwab reporting adjusted earnings. These are the quarterly earnings of 68 cents a share for the quarter ended in December, lower than the same quarter last year. Revenues also falling almost 19%. And Citizens, one final one to just check in on. Citizens Financial Group. That one also trades when the cash session opens, reporting a Q4 profit that fell 71% due to a charge as well to replenish a deposit insurance fund. The bank warning that its net interest income could fall this year too. Now, among some of the other movers, we are also looking at Alibaba. Now, Alibaba is one that is all sessions on the IG platform, I believe. Let's just punch it up for you. Alibaba, yes, is all sessions, and it is moving lower as we speak, down 2.7%. Many US listed shares of Chinese firms like Alibaba, like Bilibili and also XPeng falling after Chinese data showed that the economy's recovery appeared shakier than many had thought. Now, one other key financial instrument, or one key sector that we are keeping an eye on, is, of course, oil, especially due to the events taking place in the Middle East, namely the Red Sea. Plenty elsewhere too, as Chris mentioned earlier, that impact oil. One of the key factors, of course, is China and its consumption. GDP there growing 5.2%. This is for Q4 versus the polls expected 5.3%. This is a Reuters poll. Also, the 2023 refinery throughput in China hitting a record high. And the dollar remains near 1 month high as Fed rate cut expectations ease. And certainly with that resilient figure that we saw today, that those easing of rate cut expectations might have grown as well. Just looking at Brent for you. Brent on the day, on the session so far, down 1.5%. Let's have a look at WTI for you, which is called US crude. On the IG platform, down 1.6% or thereabouts. Now, before we go, a quick look at the volatility index, because as I mentioned earlier, volatility is rising. And the index is now at 15.38, slightly higher than before that stronger than expected retail sales figure. US stocks, though, indicating that they're extending declines after that retail sales figure. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.